Okay, dear PM students, let's discuss this question, and this question is on topic pricing, and I've taken this question from Study Hub. And a very important thing, let me tell you right now, at the end of today's video, there is going to be a big announcement, and this big announcement actually belongs to June 2026 attempt, which is right now your attempt. Let's dive into this question. The name of the question is Albani, okay. Using the standard cost, calculate two different costs plus prices using two different base and explain the advantage and disadvantage of each method. Using standard cost, calculate two different pricing. Okay. Cost plus prices. Okay, fine. Albani has recently spent some time on researching and developing a new product for which it is trying to establish suitable price. Previously, it has used cost plus 20% to set the selling price, the standard cost per unit. So majority of, I think major part examiner has already done in the question. They have given us a cost per unit. A standard cost per unit has been estimated. Direct material 1 will cost $10 per unit. Material 2 will cost $7 per unit. Direct labor will cost 13 and fixed overhead 7. Now very easy. We can go for two traditional techniques of deciding cost plus pricing. One is marginal costing and another is absorption costing. When we'll be using the marginal costing, under marginal costing, we don't consider the fixed cost, which means that ignore this $7, then marginal cost is $30. So first I'm going towards marginal cost plus pricing. So marginal cost, the variable cost is 30. Now simply add the markup, which is 20%, and that is going to be 6 if I'm not wrong. So logically, the selling price is going to be 36. I'll quickly give you the advantages. What are the possible advantages if my company follows marginal cost plus pricing? Number one, easy to calculate. You can see that. Easy to calculate. Number two, of course, the data is readily available. There's no issue at all. So it's easy to calculate. That is one of the, I would say, main advantages. Plus, you can adjust the markup. Right now, you are saying 20%. You can go for 25, 30, even you can reduce. So you can adjust the markup as well. But there are disadvantages also. The one of the biggest disadvantage in when you go for marginal cost plus pricing, you ignore fixed cost. You ignore fixed cost. It means when I'm selling my product for $36, it is no guarantee that I will be able to get the profit. So disadvantages, ignoring fixed cost, and of course, there's no guarantee the price at which I'm going to sell my product, I'll be getting a profit. Plus, it ignores the price demand relationship as well. You're not looking at the market. You're just bringing the market, which bringing the, I would say, selling price, deciding the selling price, which is organization oriented. What your company believes that will be selling product at this price, and that's it, whatever the market. So price demand relationship is missing also. But this is one of the method, which is margin costing. We have got absorption as well. If we go for absorption, the benefit would be we will consider the fixed cost as well. Let's say if we go for absorption costing, if I go for absorption costing, I'll take the unit cost, which is 37, simply add 20% markup. Markup is a percentage of cost. 37, if I take 37, if I take 20% of this, I'm getting 7.4. So here comes your selling price. 37 plus 7.4 gives me 44.4. What are the advantages if my company goes for absorption costing plus pricing? Number of advantages are there. Number one is easy to calculate. It's very easy, simple to calculate. Data is already available. Second advantage is whenever you will be selling even a single unit, you know that you will be selling your product at a profit. Okay. Plus, you know that we will not be selling the product at we will not be selling even a single unit less than a cost. So these are the advantages. If you go for the disadvantages, again, I would say price demand relationship is missing. Another disadvantage is it's not so easy to allocate the fixed cost to a unit of XYZ product. Because when you'll be allocating a fixed cost to a product, okay, it is, I would say, not so easy. It has got a number of assumptions. So allocation of fixed cost to a unit is not so easy. So these are the, I would say, disadvantages. So that is all about part A. Now let's talk about part B. Give two other possible pricing strategies that could be adopted and describe the impact of each one on the price of the product. 4 marks. Give two other possible pricing strategies. You can go for price skimming. What do you mean by this? Actually, your company can go for price skimming. If you go for price skimming, initially you will be charging a high prices. And it is only possible when your product is altogether new. If your product is altogether new, then you should go for price skimming. That is one of the possible strategies, price skimming. There's another possibility, you can go for premium pricing. Premium pricing means you can charge more than what your competitor is charging. The question is, when it is possible that I can charge more than what my competitor is charging? It is possible if your product could be differentiated from competitors, of course, in a better manners. If your product has got more features than what competitor is offering, you can go for premium pricing. What else are the possible strategies, even though they have asked two, but you can, one I have mentioned price skimming, then premium pricing. You can also discuss that company can decide the price on the basis of maximum profit. For that, of course, you have to first develop a demand price relationship. And if you recall a little bit concept of MC is equal to MR, if you can simply bring up the price on the basis of MC is equal to MR, then you will make sure that this is the price where we can make the maximum profit. So that is another one of the, I would say, possibilities. Another possibility is price discrimination. You can sell the same product in different markets at different prices if the price discrimination is possible for you. In fact, even in the same market, you can discriminate the prices on the basis of, I would say, age, if it is possible. If I just give you the example of an airline, so within airline, you can see that tickets, they have got different prices, or even on the basis of age. Infant child will have a very lower price for the ticket, if I'm not wrong. So another possible strategy is price discrimination. For examiner did not ask us to go for 4 or 5 different pricing strategies. They have asked you 2. When a question says give us the 2 pricing strategies in exam, then you have to restrict yourself to 2. Right now, of course, you are not giving exam. You are just learning. That is why I've discussed more than 2. I've discussed price skimming when your product is altogether different. It's new in the market. Go for price skimming. Initially charge high prices, but make sure you're going for price skimming, your product should be new. You can go for premium pricing. You can charge more than the competitor when your product is differentiated from the competitors. Again, in a good manner, your product has got more features than the competitor. You can charge more than what your competitor is charging. You can go for price demand relationship. You can decide the selling price on the basis of MC is equal to MR. In this way, you will come to know at what price the company is going to make the highest profit. Price discrimination, check if price discrimination is possible, then go for the price discrimination. There's one more possibility. Just take the price from the market, accept what market is willing to give you. You can go for that as well. So students, that is all about the question, Benny. You can find the answer. I don't know. I've given the answer I've given here. One is 36. Another I've given you. So the point is, you can see the answer on Study Hub as well. Now let's talk about the biggest announcement which I wanted to tell you. And this biggest announcement is Abilu School of Accountancy is offering a free, you are hearing me right, correctly. Abilu School of Accountancy is offering a free crash live online course for June 2026. It is free, obviously online, live for June 2026. But recording will only be available to those students, they are going to be enrolled with us. They are going to be registered with us. But don't miss this opportunity. When exactly we'll be launching, what are going to be the timings? For that, you should contact admin. They will give you the further details. So don't miss, I would say, the biggest opportunity if you are sitting in PM in June 2026. And let me tell you one more thing. In that crash course, I'll be working on your concept buildings, and I'll be working on your practice, and majority of the practice you will see that we'll be doing from the study hub, so that your interaction with the study hub questions should increase. So concept building will be there, practice will be there from the study hub questions. So that is all for today's and class of PM, and this is the biggest announcement. Please consider this opportunity with seriousness. Thank you.